welcome. Let us start analysis for the fourth week of December, starting from Monday, 23rd December. So, 20 December was, you can say, a bearish day. It fell down from this point. So, this remains PDH, and this point will be PDL, previous day low. Now, previous day low is not that significant. Previous day high is uh, supply zone. So let us mark this as supply zone. We will mark here this point. This is the supply zone, and this is PDH. Now, this yellow thing, this yellow box was a gap border. Since this yesterday's high was here, now the gap border will be restricted to this level. Now this has remained the gap border. Now this gap border is not relevant because this much gap is filled by yesterday's candle, so only this gap is there. So this gap border we have to follow. Extend this is the gap border, this is supply zone, PDH and PDL, and I don't see any other relevant thing other than this. This is a breakout line, like a turning point, you can say. Turning point, I just extend for today. Let us see what happens now. Today is a wide CPR. Wide CPR is sideways or reversal day. First candle is green candle, but within the CPR, so no trade. As long as the candles are within the CPR, there is no trade. Now this candle has broken the CPR. This is a breakout, CPR breakout, but low probability. There are two reasons for low probability. The first reason is the CPR is very wide. When the CPR is very wide, it is usually a sideways or reversal day. So breakout going in one direction is a less probability. Second reason is this is the third candle. So this is a parabolic move. 1, 2, 3. This is not like immediate breakout. This is a momentum breakout. Momentum breakout is less probability. So there is no entry on this candle, long entry. Then this candle, I think, yes. Okay. This candle has broken the top, like CPR top was broken by this candle and then it reversed. So this candle, like 12 p.m. candle, will be a false breakout candle. But again, it's a low probability because there is no entry inside the CPR. Although it worked, but it's a low probability. So no entry inside the CPR. Now, this candle has broken the CPR again on the white CPR day, less probability when there is a CPR breakout because it's a reversal or sideways day. Sorry, 135 candle has given the reversal, so it's a false breakout, but no entry within the CPR. Within the CPR means going inside the CPR, no entry. Although few setups have worked here, but as a rule we should not take entry, so there was no entry. This was a no trade day. And no trade day are very important to follow because in such days you tend to save your capital. That should be your first prime motto. So let us try for 24 December. uh, the in here. Okay, this is where is the PDH? Yeah, it's the PDH is here. So okay, this is PDH and this is okay, this is PDH, PDL, and no other important level. And this is very narrow CPR. Very narrow CPR is trending day or zigzag day. 24 December, first candle, there is no entry because it is within the range, although it is a narrow CPR. This candle has broken it. 9:30 candle, broken the range, but this is low probability because very narrow CPR. Range breakout trade is high probability when there is average CPR. And second thing is, if you take the trade here, your PDH is on the way, and this pivot also, so not a big deal. Not a it's not a good risk reward, so low probability. Now, okay, where is the trade? You can see uh, the trade is on this candle, 9:45 candle. We just drop this, the low of the first candle and the range breakout. So after the range breakout, this is a false breakout. Take the trade here. Okay, in this case, you guys will say that, but the stop loss should be days low. What is the risk reward? 2, 1 is to 2, 1 is to 2. Yeah, 1 is to 2. It goes where? Okay. Now, this is the setup. Actually, if you take the trade here, below the day's low should be stop loss, and then twice the stop loss is your target. But I think this candle has taken your stop loss. But why it did not work? This is again a low probability that I will now explain why it is not there. You can take the stop loss here, then it would have hit, but this is a low probability. I'll just remove this because you should always focus on the day's high. This is a day's high. When there is a false breakout and day's high is there near, then it's a low probability because your resistance is there. And even if you want to take a trade, then take a trade here uh, below the below the false breakout line should be your stop loss, and then twice the stop loss. This candle has broken the day's high also, but no trade because it's a parabolic breakout. If it would have been consolidated here and then the breakout, then there's a high probability. So there is a trade here, but this trade cannot be treated as like there are two false breakout trades. One is false breakout happens and the market continues to go in the same direction for rest of the day. But here you should be trade bound, like you take the trade here, put your stop loss below the candle or below this breakout line, and twice the stop loss is your target because this is very narrow CPR. This is a zigzag day. It usually is a zigzag day. And worst case, if you take your stop loss here and expect the market to go up on the same direction, then your stop loss may hit with this candle, this last candle of the day. You see, there are uh, different views of different people, but when you follow the pure price action, you always try to minimize your risk. So I would suggest, if you are not sure with this trade, don't go to take the trade. If you are, unless you are 100% sure about the trade, don't take the trade. Like what happens, our mind tries to make a trade on every candle. Please avoid that. There is no trade on every candle. Maybe one or two trades from whatever, like so many candles of the day. So what you have to do is you just wait for the right, and if you are confused about the trade, better not to take the trade. Worst case, what will happen? You will miss the profit, but you will not lose. No losing is the game. Winning is not the game in trading. So in such tricky days, keep your position sizing correct and stop loss at the right position. So that's it. Let's go on the next day. This is okay. Now this becomes your PDL. This is your PDH. PDH almost mostly remains same. There are other reasons also why this could not be broken or it could go up, because you see this is a strong supply zone here. From this point it fell down. and then again it did not meet that point, so this can be treated as supply zone with a pivot. So that's why market fell from that point. This is the reason why the market could not go in the same direction. Usually it goes because first is very narrow CPR, second is there is a supply zone here. Now where is our this is the PDH, this is PDL. Let's go on this day. This day is the market opened, first candle took the support from CPR. Usually it is the PPT trade, it called pivot pressure point trade, means these three pivots are pressuring this to trade in the same direction. But this is low probability because there is a PDH immediately, and second is it closed exactly on the pivot. Rather, this is the trade, 920 candle, the second candle. This is the reversal trade. You should go short here, stop loss above the candle or above this, and this is called extreme candle reversal pattern. Whenever the first candle is big, the second candle is of opposite view of the first candle. Like second candle is a reversal candle, then you should go follow that candle. Both the cases, if this is a red candle and second candle is green, and it should be a big candle, first candle should be big candle. So now you go short here. Okay, keep your stop loss somewhere here. Twice the stop loss, or day's low is your target. But yeah, day's low is a twice the stop loss. Yes, exactly. CPR, right, this is your target and you should get out. Now there is no trade on this candle because it is inside the CPR. Then there is no trade because this candle has not broken this week's. Then there is no trade, then it reversed, then it went, then there is no trade at all. Yes, there is no trade. This candle, from this it is reversing here, but it's not a proper bullish candle. uh, Price rejection from top, lot of wicks from the top, and it's not a bullish candle. Secondly, this is not the uh, buying zone, so there is no other trade, only one trade which worked, and that's it. So now let's see this next day. This is PDL, PDH, this is PDH. Okay, this reversed from this point, so this can be treated as supply zone. Now again the market, the CPR is very narrow, so narrow CPRs I'm quite with my experience, it is unpredictable, like anything can happen on that. Narrow CPR is fine, but very narrow CPRs are dangerous. So please have a proper risk reward setup, and uh, get out of the trade as soon as your stop loss or target hits. No more venturing on such days. So first candle was within this range, so there is no trade. Now there is, as soon as first candle is formed, with the experience you can say, okay, there is no trade unless this level is broken or the bottom is broken, or it takes the 20 EMA as a 20 EMA retracement trade. So where is the next trade? On this candle. This candle is 925 candle. 925 candle, yes. Why 925 candle is a trade? Because this is a supply zone and this candle is breaking the supply zone, but this is still a low probability because look how small body of the candle has broken it. It should be a, it is not a convincing breakout, so there is no trade on this. Now this candle has reversed, but this candle has also is not a proper bearish candle. If you see, this is a supply zone, but this candle should be, there is a long wicks here, so that's not a proper bearish candle. Now this candle has again uh, trying to go in the same direction, but this could not break the previous week, so there is no breakout here. After that this candle, okay, this went in the same direction. Now on the whole thing you miss this one, no problem, this will happen. If you want to follow proper risk reward, you will miss lot of opportunities, but whatever you take, you take with conviction. So you should be prepared, always prepared for this. If there is no pattern, should not should not go short or long. That's it is as simple as this. Now, okay, the market reached at this point, there is nothing here, and then you should aim how market behaves on the 20 MA, whether it is 20 MA retracement trade or it will break the 20 MA. Now what will happen here? Okay, here it gave, this is like this candle 1110 candle is a 20 EMA retracement pattern candle, means you should go long here, keep your stop loss, and then expect it to go in the same direction. But it did not happen because immediate, like for previous day I told you, unless there is a pivot below the 20 MA, this is a low probability. So if this pivot would have been here, then it's a high probability. Since there is no pivot here below the 20 MA, that's a low probability. Whereas this is the high probability. You look, it was trying to take the support, and then this candle has broken the 20 MA. Not only broken the 20 MA, it has immediately reversed from this. The previous candle is the opposite view, and this candle is a strong um, bullish bearish candle because it has no wicks down. So take the short trade here, short position, and your stop loss should be above this. That's a swing high, and twice the stop loss is your target. So exactly this is your target. So somewhere here you can be out. Yes, this point. So your target is achieved. Now there is no trade unless market comes to this point and tries to behave something. So market came to this point, but there is no, like, this pattern is, this is a green candle which can be treated as green candle reversal pattern, means you can go long here, keep your stop loss, twice the stop loss is your target, but this is a low probability. Why I'm saying low probability? Because you should always remember there is no trade after 3 p.m. Anything forms on or after 3 p.m. there is no trade, because you are left with very few time and anything can happen within that. Most of the patterns will fail because that is a squaring of time, like half an hour most of the people try to square off. So there is no trade here. That's it. Your one trade is there, that trade hit your target. That's it. We are done for December, and I wish you a happy new year in advance. And please trade wisely, trade with stop loss, and happy trading. Thank you. Bye bye. Take care.